Hello, welcome to the Nigerian Investors podcast, the unofficial podcast that tracks and reports on the activities of the Nigerian boss. My name is Moody, and with my colleague Aye, we will be hosting this podcast. TNI podcast is dedicated to stimulating a renewed enthusiasm among the general population with regard to the activities of the Nigerian Stock Exchange. Ultimately, the goal of TNI is to see that many Nigerians from all walks of life, both at home and in the diasporas, become active participants on the floor of the Nigerian Stock Exchange. Before we go further, we would like to place on record TNI podcast is solely for educational purposes and not a replacement for professional financial advice. Let's begin. Hello, welcome back to the Nigerian Investors podcast, TNI for short, the favorite podcast that brings you investment news and opportunities in Nigeria, especially the stock market. Today, I'm with my co-host, Aye.
Hello, listeners. It's nice to once again be here giving you some insights from the Nigerian stock market. It's a beautiful day, and I think we have something nice today.
Yes, we do. Whenever you see Aye on this podcast, know that we have something interesting to cook, and it's going to be very delicious, right?
Right, indeed. Right, indeed.
Yeah. Today we want to talk about a good strategy for new investors as well as old investors. What we're going to talk about today is called dollar cost averaging, but because we'll be focused on the Nigerian stock market, so we're going to rebrand it as Naira Cost Averaging. And we just want to apologize now because we might probably be interchanging it. If you hear dollar cost averaging, we're still referring to Naira cost averaging, okay? Without further ado, can you give us introduction what Naira cost averaging is all about?
Yes. The concept of Naira cost averaging is an investment strategy where the investor basically invests a fixed amount of money in a particular stock at regular intervals. So basically, you are planning to approach the market maybe on a weekly basis or a monthly basis, right, or a bi-weekly basis, depending on whichever works for you. And you are going to be investing a fixed amount of money. Perhaps maybe you've decided, okay, let me budget X amount of money for my salary, and I'll be investing this amount maybe every week within a month, or every 2 weeks within a month, or every month even. And you're going to be investing and targeting a particular stock regardless of its price. So it basically allows you to buy more shares when the prices are low, but you'll be buying fewer shares when the prices are high. So you are basically approaching a particular stock regardless of the price it's trading at the market. You are just going to be buying that stock at a predetermined and fixed interval with a fixed sum of money. But you can always be flexible with these kinds of things, right? And it's a strategy that is essential for mitigating risk of buying the market during peak times, and then you just basically spread the investment over a period of time. You understand? In other words, NCA is used by investors to reduce the impact of the market volatility on the overall purchase of a stock. And you're just basically attacking a stock at different prices. You are basically just ironing out the volatility away from your strategy and just focusing on buying a stock at different prices.
All right, that's great. Thank you so much for that. Understanding the Naira cost averaging, just to add more context to what he has said, Naira cost averaging is a systematic method for investing in which an investor makes regular purchases of a specific stock over a period of time. Let's say, for example, you add 1.2 million naira to invest in the stock market. Instead of investing this money at buying a particular stock, let's say UBA, in one single trade, you decide to use this strategy of Naira cost averaging and choose to invest 100,000 every month for the next 1 year. At the end of the year, it will be 1.2 million naira. So by committing to this fixed amount, you as an investor, you buy more shares when the prices are low. But when the prices are high, you tend to buy fewer shares. But the average cost of buying these stocks in a 12-month period becomes very low, unlike when you buy it at a lump sum. The goal of Naira cost averaging is not necessarily to maximize returns, but to reduce the risk associated with market timing. Every investors, because that's basic human instinct, we tend to want to time the market. We want to say, oh, let's wait for the market to slow down, then I'll come in. And it has happened to so many of us, even people that have good experience in the stock market. Every now and then, we allow our emotions to play a role in the way we invest. There are so many examples. I can give example like recently, African Prudential that had a rally of over 59% in this week that just concluded. I had a plan of buying Africa Prudential because I was having this feeling that they might do a bonus because the outstanding share of Africa Prudential is just 2 billion units. But I was at the same time waiting for the price to drop because then the price was at like 9 naira. And I was like, I want the price to drop to 8 naira, then I will enter big. What I used in convincing myself was I'm not timing the market. Rather, I'm saving more money for when the price is right for me. Then I will buy more of this stock. That was what I was thinking. So I felt I was saving money, but I was actually timing the market, despite my experience, knowing that it's wrong to time the market. But unfortunately for me, the stock started gaining momentum, and from 9 naira, the stock closed at almost 17 naira at the end of Friday trading period, which is just 2 days
17,
ago.
yes, yeah, it closed at 17.25, 17 naira 25 kobo per share
So
as of the close of
you
trading.
see the danger of timing the market because I was timing the market and I missed out big time. If I had just gone in using the Naira cost averaging, it would have been better for me. But I chose to time the market, which is always not a good thing to do. Sometimes you might get away with it, but most of the time you're not going to get away with timing the market. So NCA is a very good strategy that you can use to beat timing the market, or rather for you to forgo timing the market. So that's what NCA is all about. The next thing we want to talk about in regards to NCA is how NCA works. And Aya is going to tell us more.
Yeah, so just to figure out how the NTA plan works for every investor, the first thing you want to decide is the amount of money you're going to be investing in the market. So you want to come up with a fixed amount of money that you are comfortable investing at regular intervals. And this amount is going to remain the same regardless of market condition or the price of the stock. But like we said, you can always be flexible with this. But for discipline's sake, if you want to be more disciplined about this, it's always best to have a fixed amount of money that you're going to be investing in the market at regular intervals. The next thing you want to also figure out is the timing, right? The interval, the period that you want to be making these investments, right? So basically, do you want to go into the market monthly? Do you want to go in quarterly? Do you want to go in biannually, bi-weekly, or even weekly? When you figure out the amount of money you want to invest, the next is now what time do you want to enter the market? Do you want to enter the market every month, every week, every quarter, or twice a year? That's one thing you have to figure out. The next thing you also have to do is that you have to stick to the plan. You have to commit to the plan. And this is where a lot of discipline comes in, right? This is where mistakes can easily be made. You have to just tell yourself that this is the plan. I'm going to invest X amount of money at this period of time in the market. And I'm going to stick to it regardless of whatever is happening in the market, wherever the stock price might be. So an example is an investor applies a NCA plan to buy growth stock of a company that fluctuates in price. They may purchase the different quantities at each interval, maybe throughout the month. When the stock price is high, they will probably buy fewer shares, and when the stock price is low, they'll probably buy more shares. By approaching the market with this strategy, it allows them to average the purchase price of their stock at different prices throughout the entire investment of the stock, right? And it just helps them to reduce short-term volatility on their portfolio. It helps reduces that.
Okay, thank you so much, Aye. Now we want to look at the advantages of Naira cost averaging. One of the advantages of Naira cost averaging is that it reduces market timing risk. Like the example I just gave when I was timing the market and I missed that big time. So because if you employ the Naira cost averaging strategy, it will minimize the risk of you investing a large sum of money at an inopportune time, such as right before a market downturn when things go south. So by spreading out the purchases over time, you as an investor, you avoid the uncertainty of market timing, which can be challenging for even seasoned professionals. Another advantage of Naira cost averaging is that it encourages consistent investing because you do it at a regular interval, monthly, weekly, yearly, as the case may be. It gives you that consistency. And consistency, if you remember in our very first episode, we did mention that consistency is the key to being a successful investor. In fact, in all kinds of investment that you do, if you remain consistent, you become successful. Naira cost averaging encourages consistency because it fosters a disciplined long-term investment approach by encouraging regular contribution. So this consistency is key to building wealth over time, especially for those who may be tempted to delay investing due to market fluctuations or concern about timing. And number three advantage of Naira cost averaging is that it takes advantage of volatility because stock market is very volatile. Because of this volatility, there is tendency for people to lose money very quickly, and also a tendency for people to make money very quickly as well. Naira cost averaging helps an investor to weather through this volatility. Number four advantage is that it reduces emotional decision making. Believe me, you emotion is one of the factors that really derail us when it comes to investment because we are human beings, we have emotions. Our emotion play a big role in the way we invest. There's a book that talked about the psychology of money. If you read that book, you understand a lot about how our emotional disposition plays a big role in the way we manage money as well as investment. CA will keep in check that emotional uh, attitude that would bring to investment. And finally, there is low initial investment requirement. With NCA, it makes it accessible to investors with modest budget. So even though you start with, let's say, 5,000 naira every month or every week, NCA will give you the opportunity for you to accumulate wealth or build your portfolio over time because you'll be doing it at a regular interval, even though the money that you invest is very low. But it gives you that opportunity to start low and grow from there. Like every other thing that has advantage, there are also disadvantages. Aye is going to take us through the disadvantages of Naira cost averaging.
Exactly. So one of the biggest obvious disadvantage of the Naira cost averaging plan is that since you're basically targeting buying a stock regardless of the price, unfortunately you might miss out on very strong bull markets. You have markets where if you had invested a huge sum of money during the bear market when the stock price is low, you will have seen a lot of gain when the stock price goes up during the bull market. But unfortunately, with an NCA plan, you're constantly investing regardless of the price. So you're probably going to invest some money when the stock price is also very, very high. So your average cost of your share might be actually very, very high, right, over the long term when you consider it, right? And one other problem with the DCA plan, the NCA plan, sorry, the NCA plan is that it does not guarantee profit or protection against loss, right? And this especially is obvious when you look at companies that are probably doing poorly over the long term and the stock price is crashing, right? So you can apply a DCA plan, right? But then it won't change the fact that the stock price is crashing. You're still going to see loss on your portfolio with respect to that specific stock. If the price keeps dropping, you can keep averaging down, but the stock price is just going to keep dropping. So another problem with the DCA plan is that it's not very effective again in stable markets, or let me just use stable stocks in this case because relatively speaking, right, the market might be very volatile because of some stocks, right, some highly priced, some high cap stocks. But then there are some stocks that are not, they don't move a lot. I think a very good example is Better Glass. It's a stock that doesn't move a lot. So if you can apply DCA plan, and you probably will see much advantage because you're probably going to end up buying the stock at relatively the same price throughout maybe a quarter or a month or whatever. And you are not going to capture the stock at different prices because the stock will just stay relatively stable, right? So it's probably you're better
Yes.
off just buying the stock, a lump sum of the stock at a specific period of time, and that will just be all for you. That will be the best approach for that kind of stock. Then again, you have to consider the transaction fees. Whenever you're buying stocks or you're selling stocks, there are transaction fees that you have to pay. But as investors, we are trying to minimize these transaction fees. And when you buy stocks using a lump sum, right, at just one purchase at a time, your transaction fees are just at once. But if you have to buy it over a period of time, let's say you're buying stocks on a weekly or bi-weekly basis, that means you're paying transaction fee on every transaction you're making. And that can lead to a lot of accumulated costs in the purchase of the stock. So those are the disadvantages of the
Okay. We've already apologized at the beginning that we were going to mix it up,
NCA.
DCA, NCA. So, because DCA is what is more popular, that's what the world knows it to be. But in Nigeria, come on, we spend Naira. So, let's localize it. So, it's NCA. But if you hear DCA, just forgive us. It's not deliberate. All right. So, now, why we think Naira cost averaging appeals to investors? Why do we think that investors like using Naira cost averaging strategy? Because it enables them to prioritize their consistency. It also enables them to become disciplined at investments. So you become a disciplined investor, and over time when you keep doing a particular thing, it becomes an habit, and you become very good at it. That's how many people learn skills. It's appealing to them because of that, and it makes them to be better at managing risk. So it makes them to become good managers over their portfolio. And most times too, it's keep in check that human emotion that negatively affects the way we invest. And it also aligns well with the goals of investors who have a long-term horizon. Long-term investors, they will benefit from Naira cost averaging because their target is usually probably they are investing towards retirement. So they are not bothered about the fluctuations in the market right now. So their outlook is long term. So Naira cost averaging will really work out for them, especially if they are investing in stocks that are very volatile. Like I said, one of the disadvantages is that if the stock is not volatile, if it's a stable stock or in a stable market, it doesn't really work out well. But luckily for us, most of the times the stocks that we are invested in, they are very highly unstable, and so they are very volatile. So Naira cost averaging will really work in that situation. It also would work for or become very appealing to people, investors who want to avoid market timing. If you are the type that is really worried about timing the market, for someone like me that has learned my lessons with Africa Prudential, so it might be very appealing to me because it's something that I will be able to do since I work and I earn money on a regular basis. So I can plan maybe part of my salary and use it to invest at a regular basis and all that. So that's another thing that makes it to be very appealing to investors. Then also, it is a simple, low stress strategy. So because of that, most investors really like it. It's very simple. Like the way I explained it, it is a strategy that you put a fixed amount of money at regular interval, irrespective of the market price. Very simple. You don't have to stress yourself. You don't have to kill yourself worrying about the price, waiting for the price to drop a little bit before you enter. You're timing the market. So those are some of the reasons why we feel like Naira cost averaging is very appealing to some investors. I will do the conclusion for us so that I'll call it a day.
The beauty of the Naira cost averaging plan is that it instills discipline and a long term approach to wealth building in the market. And we'll tell you this for free, right? Discipline and long term approach are very important in the market, right? I mean, you won't believe just how much advantage it comes with being disciplined and looking at the long term horizon. Even investors who claim to be short term investors, they're in the market now. Maybe they're investing for the short term, but they've been in the market 10, 20 years playing this short term by trading on the market, but they are still in the market, right? And so when you think about it in terms of that discipline and that long term approach that NCA plan affords you, it's a very, very big plus. Now, it's this is not to say that the NCA plan is the most efficient way to approach the market. Obviously, we've said this, right? You're buying at different prices, so automatically that just means that you won't get to get the maximum benefit across the portfolio. However, you are still able to balance the risk reward potential of your investment, right? It's very, very simplistic and accessible and very attractive option for wide range of investors, for beginners all the way to experienced investors. Moody has already told you about just how he missed out on Africa Prudential because he was trying to time the market, right? He's not the only one. I've also missed out on a good investment. I think this year my biggest mistake was Wapco Lafarge, right, which I saw at a very cheap price. And I wanted to buy that stock, but fortunately, I kept telling myself the stock will wait for me, right? The stock was relatively cheap and it wasn't moving, right? And I kept telling myself the stock will wait for me, right? The stock didn't wait for me. I mean, this big news about acquisition, and that alone has shown the stock price up. And I basically, well, I bought the stock, but I've missed out on some very good gains I would have made if I had just approached the market with a more disciplined and more timed approach. So the advantage of the NCA plan obviously is just that, right? It gives you the opportunity to be disciplined, and it gives you opportunity to invest over a long-term horizon in the market, right? Now, the important thing to keep in mind is that every tool has its use, right? You have to be flexible with the way you use these things. So while we are saying, okay, approach the market with a fixed amount of money and a fixed interval, right? You need to keep in mind what works for you. Like Moody has said, if you're a salary earner, right, you already know you are earning a specific amount of money at the end of every month. You can choose to approach the market from that perspective. That helps a lot because now you know, okay, I'm going to get my money at every month, so I'm going to invest in the market every month. You can then decide, okay, let me save a portion of it, right, and approach the market maybe on a quarterly basis, right? So you can be very, very flexible with the way you approach the NCA plan. You don't have to necessarily invest every week, right? Especially and this applies to different stocks, right? Some stocks, like we said, some stocks are not as volatile as others. Bank stocks are very volatile. Every market day, bank stocks are moving, right? I mean, if it's the Fugas, I guarantee you one of them is going to make a move either down or up every day, right? Every trading day. But some stocks, they barely move, right? They move maybe once every month or once every quarter. I mean, I think CAP is a very good example. Chemical and Allied Products is a good example. I think Beta Glass is a good example. They're not so volatile. They tend to be very stable. They tend to move once every month, once every quarter, or whatever, depending on the case. And you can approach each of these different stocks. If they are your target, you can approach them with different NCE plans depending on how volatile they are. So you can just stay very, very flexible. So it's very, very important to keep this in mind that at the end of the day, you have to choose what works for you based on what's happening on the market and how you want to approach the market. Yeah.
All right. Thank you so much. We've come to the end of this episode. Thank you for listening to this episode. Until we meet again with another fresh episode, have a nice day.
Have a nice one. Thank you.
Thank you for listening to another episode of the Favorite podcast that brings insight to the Nigerian stock market. We hope you enjoyed today's episode. To get more episodes like this, follow us on YouTube, Twitter, Facebook, Instagram, TikTok, Amazon Music, Apple Podcasts, Spotify Podcasts, as well as on our website. All this information is available in the show note below this episode. Until we bring you another episode your way next week. Bye for now. TNI podcast is executive produced by Moody. This episode was edited by Rona at Rock Quarry Village Studio.